Good morning all and welcome to today's video. So today I have two pairs on watch and those are pound Swiss, which I just put on my watch list a moment ago, and Euro CAD, which I put on my watch list last night. Just to say that I took a loss, a slightly smaller loss than we would normally see. We normally risk 1% of our trade, 1% of our account per position. On this one, I manually closed that for about, I think it was minus 0.7%. So 0.71% loss on that one. And I'm going to talk you through that now before I talk you through what I'm going to be looking for from the pairs that I put on watch. Very, very happy with this setup, and I shall explain why in a moment. So dollar Swiss, why was I looking at this position? I was looking at this position because although, if we just zoom out, although we have a series of near misses to the upside, and I've talked previously about how these near misses can often be filled, we were clearly in a run of momentum to the downside because we had this kind of impulse correction, potential continuation. We were trading below this high here, and it seemed logical to me that we would likely take out this low, which near missed to this area first. So we would likely take out that low. And if we got down to this area, most likely take out this low as well, this standout liquidity point here, before price potentially moved to the upside. And I talked about how we had this kind of 1, 2, 3 touch structure. We had this kind of structure on the higher time frames. And after the second touch, we kind of have that 1, 2, 3 wave move, giving me a clue that we would likely be headed down to complete this structure, which would likely take out that low. So that was the theory on the weekly chart. And then as I drilled down, we had this area of consolidation here. So we can separate the structures here. So on the way down, you can see once this run of momentum to the downside started, you can see that we kind of have these kind of structures where we have that kind of 1, 2, 3. We have a middle section within that, giving me a clue that this is a completed structure. Of course, we do scoop up there, but then we drop. Okay, but we can see that that is a completed piece of structure. So if you've been watching my videos regularly, you will notice how these completed structures typically play out. Okay, so that if they play out consistently, then why would we not look to trade them? We have another one here. We have this area of consolidation. We have this 1, 2, 3. We tap into that area, but notice, as I've said in the past, on the higher time frames, we typically break above before dropping. So it's no surprise to me that when we tap in here, we scoop back up to break above before the drop. And then we have that kind of 1, 2, 3 overextended middle section within this 1, 2, 3, which taps into this area, and then price drops. Okay, we then have a mini version of that on the lower time frames. So once I drill down, you can see that we have this impulse down followed by this 1, 2, 3 with a completed middle section, giving me a clue that this is a completed structure and that we will likely push down from the third touch, and we do. And then we have another kind of mini version of that, and this is the trade. I did hide that. I was going to unhide that. You've seen it too early. But anyway, this was the trade. Okay, so we pushed down aggressively. I talked about, if you just analyze this you can see that this is an expanding pattern, and expanding patterns. So by expanding pattern in this instance, I mean when we have higher highs, okay, and lower lows. These can act as reversals or continuations. But when we have a reversal structure, when we have an expanding pattern at an area of value, okay, these more often than not act as reversal patterns to the downside. Okay, and we see that there. And I said we've got the 3 drives. We've got the first drive. We don't really push away from here, so I'm not really counting this as a second touch until we push away. So I'm not counting this as a second touch because we don't really push away. We have a bit of a volatility wick there, but we have the first drive. Price doesn't really push away. Then it pushes away. We have this 1, 2, 3 middle section where the 1 and the 3 leg are of a similar length. We then push up to the third touch. That gives me a clue now, because of the middle section as well, that this is a completed piece of structure and we will likely push down from there, and we do. So just micro analyzing these just to give you a bit of insight. And then we have one of the clearest structures that I have ever seen. So we have this 1, 2, 3 with a 1, 2, 3 middle section. So I was looking for a potential 1, 2, 3. Okay, because we had this 1, 2, 3, and typically these are completed structures, and then within that we had that 1, 2, 3 middle section where the legs were of a similar length. We even had a 1, 2, 3 last leg, which was even better, where the 1 and the 3 leg were of a similar length. So I waited for this candle to close at my area of value. If it's above, that's fine. We close at the area of value, and that gave me permission to look on the 15-minute chart for entries. I was looking for 15 entries here on the 15-minute chart. I was looking to see if this candle closed below the area of value. It didn't. We got a bullish candle with a green wick. What have I said? These green wicks often get filled. We fill it, but we do so by way of another green candle, another bullish wick. So that will likely get filled. It does. We push up, and then we push to the downside. But by this point, it was 4:45 p.m. So I decided that since the 1 hour candle was about to close here, I decided to wait for the 1 hour close. But again, this candle didn't close below the area of value. So then I waited for the next candle, and then I got short with a market order here. Okay, and I was literally just wicked in, and then price pushed up here, and it was just trickling around, so we didn't get the momentum come in. And then I closed this manually here. Okay, I think literally at about 5 minutes to 9. So the swap hours at the UK at the moment, because of the daylight saving, is normally 10 p.m. But at the moment, for about a couple of weeks, it's 9 p.m. So I closed my trade manually about 5 minutes before swap hours, simply because the spread widens during swap hours and you can take slippage, and all kinds of things can happen during that time. If I'd have been running in profit, I've been running down here, what I probably would have done, or what I would have done, is I would have actually not moved my stop loss to break even, and I would have waited until swap hours had finished, and then I would have moved my stop loss to break even, just to give price room to breathe during swap hours when the spread typically widens. So that, I'm not sure of the exact amount, but when I put it in my spreadsheet, it will tell me. But that is about a minus. So I lost about 0.7%, 0.71%. And if you're new to trading, you might be thinking, are you not upset about that? I would be upset if I hadn't placed this trade, because this is one of the clearest structures that I've seen for quite a while. Okay, so I'm extremely happy with this, and losing in trading is just the cost of doing business. So anyone that is upset by their losses is not thinking probabilistically. They're not thinking about the fact that if you have an edge over the market, which these structures do give us, then you're not thinking over a large sample size of trades. Okay, and think about, I already know that if people are upset by losses, that they're not treating trading like a business. Because imagine you were running a business and you had to buy some stock, and then you went, oh, I'm upset by this. I'm not gonna trade it anymore. I'm not gonna run this business anymore. Well, that's ridiculous. Okay, that is absolutely ridiculous. And this brings me on to what I've noticed, is that when I post these videos on TradingView, where I'm recording this, I've noticed, and this is what I was expecting to find, that when I don't take a trade, or I take winning trades or a break even, my following typically goes up and up and up. As soon as I take a loss, my following goes down, and that already tells me, because of how consistently that happens, that as soon as a trading strategy incurs a loss, there's people that think, oh, it doesn't work. That's it. I'm not going to follow this guy anymore because it doesn't work. Well, or again, that is the same as running a business. You've got to think probabilistically, and you've got to think like a business person. That already tells me that, that if you were running a business, would you close the business every single time you had a business expense? No. Okay, so you have to treat trading like a business. You have to be business-like about it. And I look at this and I'm like, I would be I would be annoyed with myself if for whatever reason I hadn't placed this trade because of how clean the structure was. And you've seen how these structures repeat themselves. I've explained it, I think, clearly enough. And so what am I looking at now? The other thing you don't do if you're treating trading like a business is you don't chase trades. Now, what's happened here, right? Okay, price pushed down. It took me out, or I closed it manually. How has it pushed down? This is nature theory. This is what we call nature theory. It has pushed down correctively, okay? So when price pushes down correctively, the next natural move is an impulse up, okay? So which would take us up here, and that wouldn't be a structure that I was looking for. So a lot of people, when they take a loss, would revenge trade, and they would get short here, but I'm not doing that because I'm treating trading like a business. I'm looking at the nature. How has price dropped? It's dropped correctively. So I'm not going to try and chase this. I'm very happy with this trade, and I should just move on to the next pair. And that's what we have to do as traders if the entries that we look for are not shaping up. We don't chase, we don't revenge trade, and we accept that losses are the cost of doing business. So just a little kind of psychological lesson there. And that was dollar Swiss. I'm going to fully document that over the weekend. I've got a lot to do during the week, and I'm going to document that over the weekend. So pound Swiss, I'm going to have to speed up now because I spent a bit too long on that, but hopefully you enjoyed that little recap there. So pound Swiss, we have this 1, 2, 3 touch structure. Okay, I'm just going to draw this in. I'm not concerned. The reason I haven't drawn this in is because I try and keep my charts to a minimum. The less clutter we've got on our charts, the better. What do we have? 1, 2, 3, with a 1, 2, 3 middle section giving me a clue when we push down to here that this is a completed piece of structure. And all I saw this was as people getting caught the wrong side, okay, of this low before we potentially push up above it, okay? And that's exactly what happened. Sorry, that should be there. So we have that completed piece of structure. People being caught the wrong side of the market who believe what was previously support becomes resistance. Of course, you could have capitalized on a move to the downside, if depending on what your trading strategy dictated. But of course, if you're constantly selling the lows and buying the highs, then over a large sample size of trades, trading into lows and buying into highs is not going to make you. You don't need to be a genius to work out that that's not going to make you profitable in the long run. So then we have that push up, and then we have this sideways consolidation. You have this impulse correction, potential continuation to the upside. Okay, and what do we have within that? We have a near miss. We have a near miss to this high, which didn't quite tap into it, which likely means that price will find its way up to there because there are likely still orders in that area which need to be filled. Okay, and how did we get to that area? We got to this area. Sorry, I'm just going to drill down because I didn't mention which area. We have this sharp move down followed by a sharp move up, which is likely where the liquidity is. How did we get to this area? We got there by way of a 1, 2, 3. What do we have within that? We have a 1, 2, 3 middle section where the impulses, the 1 and the 3 leg, are of a similar length. Okay, so if we just measure them ever so quickly, measure that there. They're of a similar length, and even if we took it on the break of this correction, that's still about 90% of the way, so that's fine. What happens? We break below here, people get caught the wrong side of the market, who believe what was previously support becomes resistance. We then break above, and we do so fairly impulsively. You do have to remember that this is pound Swiss, which does tend to move in a slightly corrective way, but for pound Swiss, this is quite an impulsive move up. You can see we scoot back down here, but then we have the impulse correction continuation, and you can see we have an impulse correction potential continuation, and we're kind of retesting the back end of this high here, which I like. We're early in the run relative from this move all the way up to here. I like that as well. That's a tick in the box. And then if we just drill down, we can analyze this structure here. Just having to go a little bit more quickly. So we push up, we scoot back down. What happens if we just zoom in? This is negligible, but we do narrowly near miss to this area, giving me a clue that there is likely still liquidity here. Okay, and what do we have? So we have this 1, 2, potential 3 touch. And what do we have within that? We have, we have this, I forgot what tool I was using there. 1, 2, 3 middle section. If we just drop down to the 15-minute chart, you can see that if I just take that off of the chart now, Right, there we go. If I just drill down again, you can see that we have an impulse correction continuation. If we just measure those legs, that's of a similar length. Okay, so that gives me a clue that that is a completed move. And what I'll be looking for today, with all that considered, is the following. If we push down to here, this may not be ready by the end of the day, but if we get some early London session momentum when we push down to here, if we tap into this area, ordinarily I will be looking for a risk entry. So I'll be looking to call the bottoms and be looking to get long here with a rejection candle, or after a kind of trend line or a phase line break. But what I'll be looking for is a push up and a flag, and then I'll be looking to get long either on the break of the flag or within it. And the reason is because if you just zoom into the 15-minute chart, there is a little area of consolidation here, which price rallied from last time around. So it's possible that we may push a little bit lower and tap into these areas. So by waiting for the push up and the flag, I'm mitigating the likelihood of me being tagged out, price moves down to that little area of consolidation and then pushes up. And so that's one of the ways you can protect your capital and protect your psychology. So that is pound Swiss. That is my favorite of the bunch today. Moving on to Euro CAD and doing this ever so quickly. One of the reasons this is last on the list is just because it is kind of further in the run from here to here, but I'm not too concerned about that. We're kind of what the main reason, I shall get to that as we drop down to the lower time frames, but we have this kind of, we tap into this area, okay, and we have this impulse correction continuation to potentially take out this near miss which failed to tap into this high. Okay, we don't really have a structural move down to here, but we do tap into the area, break below it as we would anticipate, and then we have that impulse correction potential continuation. If we just measure the legs, okay, and we assume that the leg out of the correction is of a similar length, that would take us up to here. So that's a tick in the box. We tap into this area here by way of a 1, 2, 3 touch structure. You can see the 1, 2, 3 middle section within that, or you could have it from here, 1, 2, 3. But you can see the waves. We break below, catch people the wrong side of the market, and then we have these impulse correction continuations to the upside. Okay, so we then have, you can see the structures here. We have a structure here, we push up, we go into a little bit of a kind of pennant formation here, and then we push up, and then you can see the reason this is last on my list is partly because this middle section doesn't have a clearly identifiable 1, 2, 3. Okay, so that is if you drill out to the 4 hour, you can kind of see where price corrected, where you can kind of see impulse red candle continuation, but it's a little bit more subjective where the middle section actually is. If we measure that, that does kind of line up, but sometimes what that can imply is that, if I always say, if you can't find the middle section, you might be trading into it. So what do I mean by that? Well, we might get something like this, and price comes back down, and then we push up, and then we say, that's the reason we've come back down is because this wasn't a clearly identifiable middle section, and we were trading within one. Okay, so partly why this is last on the list, and that may be why price is moving up correctively, because we don't have a middle section. This is the middle section, so we shall see. But what we do to mitigate against that is, I don't know what's happening here. Okay, let me just sort this out a minute. But what I'll be looking for from this pair is the following. I don't know why it keeps moving that's not the forecast. Okay, so TradingView this morning for some reason has been moving all my stuff about, and I don't know why. But I'm putting old forecasts on the chart. I don't know why, but what I'll be looking for today is, if we push up from here impulsively, you can see we've not done so yet, and that may be because of what I've just touched on. But if we pushed up impulsively, we would have that 1, 2, 3, and we would, with a 1, 2, 3, the waves would be of similar length. That does imply that this 1, 2, 3 move is completed. But because of that kind of lack of a clear middle section, we may not get the entry we're looking for. But the entry I'll be looking for is an impulse up followed by a flag, and then I will be able to manage it up to this trend line if price did come back down for the reason previously explained. I have an alert set just above this high to see if we push up. That's all I'm going to be looking for. Have a great day. Have a great weekend, folks, and I will see you in the next video.